This is a special edition of Late Night Health. I'm Mark Alyn. With the high cost of health care, a person with a catastrophic illness who passes away can leave a family in financial straits, dire financial straits, and that's where life insurance comes in. But a recent study shows that 40% of Americans don't have any life insurance. Our guest is Scaturro. He is the Director of Insurance Advice for USAA. And USAA is an insurance company. Don't you specialize in military families?
We certainly do. So military and their families.
Military and their families. Why is it that many people don't have life insurance? Why don't they do it?
Yeah, Mark, I think that what we're seeing from the research is that there are a couple of common reasons why people haven't bought life insurance. Namely, they come back to cost as their number one reason why they haven't done it. But I tend to think that it's a little bit more, it might be simpler than that they just don't understand where their money is going. And once you understand the base value of what life insurance does, cost is no longer an objection. And really, life insurance, at the simplest point, gives families cash when they need it the most. Once you understand that and you see, hey, I've got these people I love, they're financially dependent on me, I want to make certain that their lives are as best as possible if I were to pass away, you understand, hey, I get it, life insurance, it's worth whatever the cost is.
Well, in these hard times with the pandemic, COVID-19, people out of work, is it still something that people should pay for in case of some kind of health care, for example, catastrophe, as I mentioned?
Absolutely. I think life insurance, like health insurance, is part of a key financial foundation. Control the things that you can, but when you look at if you were to pass away, is your mortgage being paid? Is your family's essential living expenses being covered? A lot of times what we see is, families they're struggling without life insurance and they're facing an untimely death, they struggle even more. There's some statistics that show that Americans, I think it's something like 52% of Americans would face financial hardship within 6 months following the passing of a primary breadwinner. So 6 months really isn't that long of time when you really stretch it out and look at what are the financial safeguards or safety nets that I have. So, COVID made the conversation a little bit more in our face. It's made us more aware of our finances, for better or worse, but it should tell us what are the things that we need to be doing to safeguard for whatever next emergency happens. And I definitely think life insurance is part of that conversation.
I think that another reason is that life insurance can be confusing. There's whole life, there's term. It can be confusing. How does somebody know what to get for their family?
It starts with researching, and it starts with understanding and kind of stripping away some of the jargon. And to your point about things being confusing, if you're talking about life insurance and you can't articulate or you can't tell someone else how your life insurance policy works accurately, you kind of maybe you're in the gist, but you don't know all the gory details, you might want to pause, take a step back, and continue doing research. Kind of one of those things that if it sounds too good to be true, it might be. What I tend to look for is just trying to keep things as simple as possible. So term insurance is very straightforward, kind of no-frills life insurance. It's going to cover your needs for a set number of years, so a dollar amount of coverage that's right for you in a period of time for like 20 or 30 years. But your needs in the next 20 to 30 years are going to change. Where permanent insurance comes into play is if you've paid off your mortgage, your kids have grown up, and they're financially independent on their own, and now maybe you're even approaching or in retirement, your needs are going to be different. So permanent insurance is a type of policy that will last your entire lifetime instead of a set number of years. It does gain some cash value, so there's kind of a savings component to it. But you're buying that so that you've got a death benefit for when you pass away, so your family is able to continue their standard of living. And what I'm seeing a lot of these days with retirees, they're facing healthcare expenses that they've never had before. They're facing long-term care costs that can eat into a retirement nest egg really quickly. So I like to think of permanent insurance as I want to leave money to those that I care about when I pass away, not if I pass away, but when I pass away later in life. I want to make certain that my wife, as she has a change to Social Security coming in, that she has some extra money that steps her back up to her standard of living, or that I'm refilling the bucket of money that we use towards paying things like healthcare or long-term care costs. Term insurance in most cases can be converted to permanent insurance. So if you're one of those 40% of Americans that don't have life insurance, chances are the best thing for you to do is to look at a term insurance policy, make certain that it has a conversion option, and let that be your sole policy of choice right now, and then use those features and options to your advantage as you grow older, converting over to a permanent policy to take care of other financial affairs later in life.
Sean Scaturro is USAA's Director of Insurance Advice. He's a certified financial planner, practitioner, and a certified wealth strategist. Sean, what about the cost of this kind of insurance? I know that if you're 30 years old and you have a family, maybe 2 kids, it's a lot different than when you're 60 years old and maybe you don't have kids in the house anymore. But how does the price work?
So price is always going to be based on your age that you're buying the policy, the health that you have, and the amount and type of coverage that you're getting. So it is going to be different for a lot of, it's going to be different for everybody pretty much. A 30-year-old, just to kind of put some context around this, can get a $250,000 policy for a term policy for about $160 per year, or about $15 a month. It is very affordable. So when you look at your needs, say about $500,000 of coverage might be right for you. You can figure about maybe $27 to $30 a month. It's not going to break your budget. When you look at your 60s or later into life in your retirement years, chances are you don't need $500,000 of coverage. Hopefully your mortgage is paid off. Hopefully you don't have any debt as you enter retirement, and that you don't have any type of financial dependence that are going to be longer term. Things like young kids growing up. But if your needs are still there for life insurance, chances are you're looking at a lower dollar amount, and you may be looking at a different type of coverage. Whole life, universal life, it is more expensive on a monthly basis, but it may be cost affordable over the long term because your cash value, this kind of savings component in the policy, is something that you'll have access to. So you can either borrow from that, or if you say, hey, you know what, I really don't need life insurance anymore. I've got enough money in the bank. I've got enough money coming in to make certain that we're taken care of. I really don't need to pay this bill anymore. You can cancel it out and get that money back. So there is a little bit more complexity, but where you look at your needs today are not going to be your needs in the future. So make certain that you're looking at a policy that takes care of your needs today first and gives you the options to pivot and take care of your needs in the future. And
as we wrap up here, what about special considerations for members of the military? Because that's what USAA specializes in.
Definitely. So our military members put themselves in harm's way every single day. Now, thankfully, they've got life insurance available to them through the Service Members Group Life Insurance Plan. That's basically the civilian equivalent of job-provided or employer-provided coverage. When they separate or retire from service, unless they take different steps, that SGLI policy is going to stay with the military. So USAA designed a policy that allows them to replace their SGLI coverage with USAA without having to go through medical underwriting. So because they don't always have the same health when they exit that they had when they entered, that's not going to count against them. So their health is guaranteed and their insurability is guaranteed with USAA at point of separation. The biggest thing about this, it is a free benefit when they purchase a term insurance policy. So it's a free benefit, and I love talking about it.
And if somebody's interested, where can they find out more on life insurance?
More information is available at usaa.com/life advice, or they can always give us a call at 1-800-531-LIFE.
Sean, thanks for joining us here on Late Night Health. I know we have to run. I'm Mark Alyn. Thanks for listening here on Late Night Health.